CDFIs, or Community Development Financial Institutions, are a cherished resource for underserved markets and populations. They play a crucial role in the financial ecosystem, but what if your community does not have a CDFI? Mark Pinsky is a founding partner of CDFI Friendly America. He's a noted strategist, author, and advisor on public purpose finance. In 2019, he co-authored Organized Money with Keith Mestrich, and he's leading the charge to help existing CDFIs serve bigger markets. Mark, welcome to the Small Business Matters podcast.
Thank you, Gary. I'm glad to be with you.
So, Mark, could you start by telling us about CDFI Friendly America and what your primary mission is?
Absolutely. CDFI Friendly America is a new effort, a few years old, to help CDFIs find market opportunities in communities that are not currently being served all across the country. Big cities, small towns, wherever there's a need, we're trying to figure out how to introduce them to each other.
And there are different kinds of CDFIs. As I researched this story, there's not just one type. Could you kind of explain the difference?
Sure. CDFIs, Community Development Financial Institutions, is a category of financial institutions. They're private sector financial institutions. Their primary purpose is to create benefits for underserved people and communities. And they do come in four main types. So two of them are insured depositories, so community development banks and community development credit unions are the insured depositories. And two of them are not. Community development loan funds, which are the most populous type of CDFI, the most common kind of CDFI, and community development venture funds or equity funds that do equity financing in small businesses.
Excellent. So serving underserved small businesses, they really do a great job. How do they reach out and help?
Well, the key to what community development financial institutions do is that they stay very close to the market. They know the market, they know the people that they're working, they know the community that they're working, and they listen well, and they try and provide financing that's organized around what the borrower needs, what the business, what the entrepreneur needs to be successful. And they have a lot of experience now doing that, more than 40 years experience in some instances, and they're very good at understanding what it takes for new businesses, for businesses that have been unable to get access to financing for some number of years. They're good at helping businesses get through hard times and help them prepare and be ready and have all the skills that they need to succeed.
So do they only help small businesses that have been declined or having trouble finding financing through a bank?
You know, it's an interesting thing. Often their borrowers are small businesses that haven't been able to get financing through a bank, or who perhaps have been approached by predatory small business lenders, which is an issue that we all worry about, and are struggling to figure out what to do. But often they also are, particularly when you're dealing with Black and Latino entrepreneurs, they're often business entrepreneurs who are what we call discouraged businesses. They haven't been able to even make the approach to the bank or make the approach to the others because they just feel like they're going to get no. They're going to get a no answer out of it. And so often with CDFIs, it's business owners like that, as well as those who've been turned down. You know, one of the things that's interesting is many CDFIs more than ever now have referral agreements with banks, where banks aren't able to say yes for some reason or another that has to do with their regulatory structure, their credit structure. And CDFIs are really happy to try and figure out how to make them work. We tend to say in the CDFI world, we tell the banks, we tell others, don't say no, say CDFI. Oh. And CDFIs tend to say, don't say no, say not yet, because we're committed to trying to help those businesses get to the point where they can get access to the financing they need so they can succeed.
Yeah. It's as I researched this, there were some really impressive stories. One that I read about in Chicago. With a company called the Hatchery. Can you give our listeners a little background on what happened there?
Sure, absolutely. The Hatchery is about a 67,000 square foot incubator, really, for food entrepreneurs in West Garfield Park in Chicago. West Garfield Park is an overwhelmingly Black community. And a couple of CDFIs got together. IFF is one of the CDFIs. Allies for Community Business is another of the CDFIs. Got together, bundled together some financing. Some of it was new market tax credit. Some of it was conventional financing. Some of it was CDFI financing to, I think it cost about $34 million some years ago, about 4 or 5 years ago, to put together a sort of an all-purpose, all-service food incubator where they did business training, they had kitchens, they had access to expertise, everything from bookkeeping to marketing, and it's been a tremendous success. There's something, I can't remember the number of jobs, something like 900 jobs they project by the end of next year have been created out of this. There are at least 25 businesses that have already been created that have grown out of this. And, what they did was they went into a place and took something that is often cultural in communities, that is their food and how they prepare food and what they prepare and what they sell. And it may not be stuff they may not be preparing food things that are conventional or familiar to conventional financial institutions, but given a chance, the food entrepreneurs at the Hatchery and in many other places are just, given the chance, given a little bit of support, they're just driven to succeed. And so there've been something like 100 food innovations, I think, that have come out of the Hatchery. So it's not only it's not only breeding successful businesses, it's really strengthening the community and strengthening the culture of the community.
That's a wonderful success story.
It's a great success.
Now, talking about childcare, 90% of childcare businesses are women-owned, and we know that childcare as a category was left out of the initial round of the PPP funding. Did CDFIs work with childcare businesses?
Yeah, CDFIs, so a little backstory to that. It was in the late 1990s when everyone realized as the financing, the money coming out of Washington and out of state governments was changing, that the child care facilities and early care facilities needed to come up with a new sort of business model in some ways. And CDFIs played a really important part. There was a bank no longer around now that approached the CDFI industry and provided a combination of grant funding for innovations and debt financing to really figure out a new way of helping child care facilities succeed. And so CDFIs played a really critical role in helping rethink the business in a sense. But still, the economics of child care, as you know, I'm sure, are really difficult. Either have to charge young parents a lot of money, or you've got to figure out some way to subsidize the business in some way. And so, yeah, it's often women who are the entrepreneurs. 90% sounds about right. And, so there are examples. I think we had talked about an example in Boise, Idaho, where it was just during COVID that really was struggling, but a CDFI was able to step in and ultimately provide some PPP financing. But then on the other side of that, provide some SBA financing that was intended to help small businesses recover, including nonprofit businesses, recover from the impact of COVID. And childcare was really hard hit because people were staying home, couldn't send their kids to childcare, so the businesses were really, or most of them couldn't. Most of the businesses were really hard hit, and then the access to financing was really limited. So it was a hard thing. I'll tell you, we're doing some work now in Fort Worth, Texas, and in Fort Worth, Texas, we've been meeting with a group called the Child Care Alliance, which has been able to rally a significant amount of funding from both the county, Tarrant County, and from the city of Fort Worth. And now they're trying to say, how do we work with CDFIs? And that's what we're doing there, trying to help them work with CDFIs. How do we work with CDFIs to really leverage this investment that the public sector has made so that the private sector, i.e. CDFIs and banks and others, can really extend what's going on there, sort of bring back to life the child care network that's there. Really dynamic leader is always the case with entrepreneurs. And I'm really excited about that. I think that's a great example where CDFIs play a role that others simply can't.
That's wonderful. And that's actually how you and I got engaged in the beginning. I'd read about the work that you were doing in Fort Worth. And your organization, you have worked with several cities. So you go into, Indiana, you did a number of projects there too, right?
That's right. We're working now with about 15 different cities, very different types, very different places. But it started in Bloomington, Indiana, where They simply wanted CDFI financing. The mayor had come out of the CDFI industry, newly elected mayor at the time in 2017, John Hamilton, and they were trying to figure out how do they get CDFI financing there, and the only way to do it was to innovate a new model, which has become CDFI Friendly America, and so Fort Worth is a really interesting example of that. We started out, as Bloomington suggests, with the idea that we were going to serve those smaller markets that would never be big enough to support a CDFI. There would never be a sort of an economy of scale that would make it work for CDFIs. And what we figured out was that there was deal flow there and there was pipeline there for CDFIs. That is, there were small businesses and other opportunities, but they weren't big enough to support any one CDFI. So if we could get multiple CDFIs engaged with the city, as we now have in Bloomington, we could make CDFI financing available without creating sort of the overhead burden of asking a CDFI to be there full time, which wouldn't have met the needs anyway. So yeah, we started there, but in Fort Worth proved a different point, which is that there are major cities. Fort Worth is the 12th largest city in the United States.
Yes.
Most people don't realize that. It is likely that it will surpass Dallas in total population in the next 10 years or so. It's growing at a very fast rate. It's a very diverse city. It's a majority minority city. And what we discovered there was that the CDFI financing was really lagging for no obvious reason. I mean, we can go back and reconstruct it. But for example, we look at CDFI lending. We can do this in any place in the country. But we looked at CDFI lending there over the last 15 years, and it averaged out to be about $39 per person in CDFI financing. Just to compare that, the national number is about $235 per person. So, wow. But not only did Fort Worth lag the national level, it lagged Dallas, which was at $71, and the state of Texas, which was $109. And I don't think of the state of Texas as being that well served by CDFIs. So what we discovered was in big cities, there are what I would think of as sort of infill opportunities. There are major needs there. So Fort Worth has been a remarkable, we're still in the startup phase, but has been a remarkable success. CDFI Friendly Fort Worth now has about 18 or 19 CDFIs financing or looking at financing opportunities there. We've identified about $125 million in demand.
Wow.
Not all of it's going to get financed, but there's a lot, it's a big city. There's a lot of demand there. We think we're just scratching the surface. And transactions are starting to close now. We've just been at it for about a month. Transactions are starting to close. We have 3 small businesses that have closed deals. We think we'll see a lot more. I've told the people there that I think we'll do at least $250 million over 5 years. I think we'll do more than that, but I think that we'll do at least $250 million in financing. And it's just opened our eyes up to the fact, I live in the city of Philadelphia, and in Philadelphia we have some extraordinary CDFIs, but we have a huge unmet need for Black and Latino entrepreneurs in this city. Banks have struggled to figure out how to try and address it, and I don't think anybody thinks that the needs are being met. And so even in a city where we have extraordinary CDFIs working in other areas and serving part of the need, we've discovered that there is a tremendous need for CDFI friendly strategies. So, we are, boy, are we busy. We are just, we're startup ourselves, and we're in that good stage of startup, which is you have way more demand than you can possibly meet. So we're trying to figure out how to ramp up ourselves.
That's wonderful. So what should a small business looking for funding have ready when they go in to meet with their local CDFI? What makes them a good prospect?
Sure. Well, obviously, everybody's looking for entrepreneurs who are passionate about what they do, and to be a small business owner, you have to be passionate about what you do. It's the only way to get going, right? So we're looking for that. We want to understand their story. We want to understand their vision, what they hope to create. Even if it's just we want to create some income for the micro entrepreneur. It's a one-person business, and we just need to be able to create some steady income. But we want them to come in with their story. We want them to come in with whatever financial information they have. If they have bank account information, we want to see that. If they have tax returns, we want to see that. We don't expect people to come in and be, ready to, push the button and apply for financing. We understand that we're going to work. We're going to help understand where they are, where they need to be, whether there are things they need to learn before they apply for financing, or whether there are things that can be part of the financing as they apply for financing. or even after they receive financing. We often, it's not unusual for CDFIs with small businesses to provide post-credit technical assistance, particularly in things like bookkeeping, reporting, that kind of thing, which is, it's hard. One of the big banks did some research a number of years ago, found out that most small businesses, most entrepreneurs spend no more than 3 hours a year thinking about their credit needs. And just because they're busy, they're working 18 hours a day to make it go, right? And, we have to figure out a way to make it work for them, particularly when you're dealing with underserved or discouraged entrepreneurs, because they're not used to this. They're not used to being in a financing mode. And so, we have to meet them where they are and make sure that we're providing the support that they need, the scaffolding that they need to add to what they're doing, not to take away anything from their efforts, but to make their business successful. Most entrepreneurs are not finance people. And so, we're happy to go in and take a look at whatever they can bring to the table and figure out how to help them get where they want to get.
It really does sound like your CDFI, they're a partner. They're helping you. They want you to succeed. And in a lot of cases that I've read about, it isn't a lot of money for some of these small micro businesses.
Absolutely.
It could literally be maybe $5,000. I don't know, maybe less.
Maybe less.
If it's a gardening business, it's tools. Maybe a truck that gets better mileage.
Right. And CDFIs will do, from micro businesses, will do loans as small as $500, sometimes less, in order to help somebody get started. And there are CDFIs that do small business financing, that's sort of mezzanine financing for growth companies, that's $10 million, right? So there's a whole range. The challenge, and this is one of the things we do with CDFI Friendly America, the challenge is finding the right CDFI for the entrepreneur, right? Not every small business lender is the same, just like not every small business is the same. And we're in the business of finding the right match, the right introduction, and generally then we can get out of the way, because the CDFI, the entrepreneurs, they find a way to work together and they're off and running. But one thing that's important to understand is that technical assistance that we provide is core to our business model. Our business model is to be profitable as CDFIs, but not profit maximizing. And what we're willing to do is give up a little bit of margin in order to provide the assistance that in the long term is going to help the business succeed, or the borrower succeed. It's not always a business, succeed. And but that technical assistance also becomes a risk mitigant. And CDFIs for small business, for affordable housing, for commercial real estate, have a tremendous track record of performance over about 40 years, where the net charge-offs in our business are a little bit higher, but within 10 basis points of what banks achieve in conventional markets. So it's really, we specialize in managing risk in non-conventional markets, and we're very good at it. Part of the key to that is the partnership, as you describe it, that we have with our borrowers.
Awesome stuff. Well, Mark, this has been such an informative discussion on CDFIs for me. Where can our listeners find out more information?
So if they want to find out about CDFI Friendly America, they can go to our site, which is CDFIFriendlyAmerica.com. If they want to find CDFIs that are already working where they are, there are two good sources. One is there's a program in the federal government called the CDFI Fund in the Department of Treasury. That's cdfifund.gov, G-O-V. And there you can find a list of all the CDFIs that are working. And then the organization that I led for many years, Opportunity Finance Network, which is sort of the industry trade group, go ofn.org, and it has a member locator. For those CDFIs that are a member of OFN, you can get a lot of information about them there. So, at this point, in fact, I would say that CDFIs have become well enough known that if you were to go in and do a search, whether you're using Google or DuckDuckGo, and look for CDFI name of city, it's a good chance you'll find it that way too. Which wasn't true 20 years ago, I promise you, but it's kind of good that it is now. So it makes it easier for people to find the resources they need to succeed, and for entrepreneurs to do it efficiently.
Mark, it's been a pleasure speaking with you today on Small Business Matters. Thank you.
My pleasure. Thank you.